today I wanted to go over some, I want to talk to you guys first too. I don't want this to be just, oh, hey guys, just listen to my little lessons, I want this to be where you guys get to ask me, personally, any kind of questions you guys have, because, you guys are, this is a group, where you guys are looking to be more serious and you guys have access to just directly, ask me on the spot and stuff like that. So I want to make sure that, I can help you guys in any ways to get this training thing, leveling up. Hopefully this week was a good week for you. I think maybe some of you may, I don't know. The gold chat is actually pretty chill from time to time. So I see Steve's on, Rocket Rod with his hat there. So good to see him. And all right, well, let's get started here. First things first, Alan, I was kind of thinking, why don't we go kind of just like, like we did on our first day, where not introduction, but just kind of talk about just one good trade that you made and one if you had a bad trade. And I just want to kind of just talk about it briefly. And if you have any questions, you can ask me. If you don't have a question, then we'll just move on to the next person. Is that fair? Is that cool, guys?
Everybody? Yeah, sure. We can start into that, and then they definitely want to get into your lesson as well, so we can do a little group session here. I don't think we have, we have what, 17 people in here, so so it shouldn't take too long to do that. I'm sure we can all learn something from each other as well, because I think when we did that introductory thing, a lot of people were kind of struggling with the same stuff, selling too quick, hesitation, not knowing where to cut it, stuff like that. So we'll see if that's still the same problem. So yeah, we can start that
Jose
way. I can start from
Jose doesn't want to go, so Jose was here, but Jose just left, so
that's fine. We'll start from the bottom. Jose can go last. What about Nick? Is that how we say it? Nick down here, not. I know he's muted and not showing his face. I don't know if he has a mic or not. If you guys don't, just type in the chat. It's fine. We won't.
Yeah, guys, I really look forward to talking with you guys. So just wanted to really hit on spots where, like, I really want to know how you guys are doing, right? So this isn't like a huge group or anything. This is a great group, I think, and I think you guys are serious. So I just want to know like how you guys are doing, what you're currently struggling with. So Nick, if you're listening in, you don't have to show your face. You can just unmute yourself, and then
no mic or camera. Okay. Man, you gotta get a $12 mic.
Okay. Well, any volunteers for now? Like just to start
we
off?
Go to, I think Ezra. Maybe Nick can work on typing it out. Maybe a play he had a question about or something. If he wants to type it out and post it in here in a minute.
Well, actually, why don't we start with Jose, since Jose's here now?
Oh, geez.
You want to start with Jose? Okay. All right, Jose. So what's something that you're struggling with, or maybe a good trade as well? If you care to explain. I know we had you on last Friday, so hopefully a lot of you got to listen in on Jose speak on Friday. But what's something you're struggling with?
Well, no, I just want to ask first, how was your trading day, first of all?
For me, it was good. I, as always, like, there's room for improvement. Yeah. I wish I could have done better, but I got pretty good profits. For me, it was good profits for me. So
yeah. You don't have to share your profits or anything like that. I just want if you guys don't feel comfortable sharing anything.
No, I feel comfortable. It's just like, I don't want to be taken.
I value people's privacy. There's some things that I don't want to share. You don't have to share everything, guys. You can.
No, of course. I'm pretty open with that. I don't care. So my ending profit for today was $9,600.
Wow.
631.
Okay.
I think I could have done like a couple grand more, but I was getting out of the plays way too early.
Okay.
Like for example, on GNUS, it was a mistake of my part when the market opened, but it was my favor. It could have gone the other way.
Okay.
Alan taught me not to play into the market open, but don't ask me why I pressed the buy button. I was able to get in at 490. I just saw that thing going down. I was like, yep, I'm done. And then it just shot back up. I'm like, oh, what happened here? And then I don't know, I got scared because I went in 3,000 shares and I sold it too early, and the thing went up to $7. Like I could have rode that super easily all the way up to $7. But that's the problem I'm having, just like staying in the trade till So I should like the point where I should be able to sell and not like be scared and just exit out.
Okay.
And then as soon as I exit out, the thing just shoots back up, and it's like, damn, what did I just do?
Okay, well, let me share my screen real quick just so that you guys can see what we're talking about here. All right, so here we are, news, right? So let's talk about it real quick. Since Jose, fantastic day, by the way, so a round of applause to him. News here. So, we started out with this press release, didn't we? I think news here, was it no news. So news was running up still since the other day, right? It's been running up for a few days now, but running up towards that news, and everyone's all anticipating. So anyways, here we are, and this is the pre-market, looks like. I think I went with the $5 break, I believe, right?
Yeah.
So here we are. I think you probably took the $5. Which alert did you, or it doesn't even matter. What was your entry?
My entry, like I said, I just had the order entry box open. But I don't know. I just clicked on the screen, and 490 was the limit order that I had, and that's what went through. But I like I tell you, I wasn't even I wasn't even gonna play it, because the last time I tried to play something in the market open, it went the opposite way, and it totally screwed me. So I'm like, I'm never going into the market open again.
Okay. So here's what I did. I went in at the $5 break. I went in with 5,000 shares. Okay. So I noticed that you guys know that news in pre-market was like, about 470 or so. And I'm like, wow, and this is still going up since like yesterday's close and all that, right? And I'm like, okay, well, and I think I was talking to you guys about how news, I had a higher target price in mind. I think a few days ago I said this thing could go up to $6 or whatnot. And so in order to make $6 happen, we need to break the $5. And $5 is the strongest resistance in penny stocks. Yes, we talk about that all the time. So if you guys didn't know that, $5 is just naturally the strongest resistance of these penny stocks. Okay, and when the $5 breaks in a stock that's been especially running up on lots of hype, the volume has been trading pretty good, you can expect the $5 to be a nice place. So we saw the volume spiking all the way to 550. So what I did was personally, I sold the about 3,000 shares around at 550. Okay, and I took my profits. Now I have 2,000 shares. Now, knowing that news was still, basically trending on up, right? Because I wanted to know if news was going to hold the $5 as support again. So as soon as I took so not all my profits, I took partial of my profits, and the stock comes back on down towards $5. $5 resistance previously becomes now support. Okay, we've been seeing lots of stocks that's been doing where the stock does go up, right? But not just recently. It's just been like that for a while. Okay, and we talk about how the previous resistance becomes support. So I bought another few shares, 3,000 shares again at $5, so that the stock is moving on up. And now my target goal was $6, right? Why? Because I knew that once the $5 breaks, the most of the stocks like this will tend to run up towards that next dollar. Okay, and so now in the beginning, you see how at 7 o'clock the scanners go up at like 650, right? And I wish I could post it earlier, like some of you guys that wake up like, I don't know, like some of you guys wake up at 4 a.m. or something. I can't do that, I'm sorry, but it's okay because the Trade Ideas doesn't operate at that time. Trade Ideas starts working the moment I start actually posting. It's around 6:45, 6:50 a.m. Eastern time. So I wake up at about 5:20, do my little spiritual thing. So the way I do it is I wake up at like 5. Oh, actually the alarm is set at 5:15. I kind of snooze it once just to see how I feel. So I'll wake up at like maybe 5:25 or so, do my stretching, brush my teeth, do all that, do my gratitude, every day. You know what? I'm gonna win in the market. I wake up and I'm like, I'm gonna win in the market, man. I'm a winner. I'm gonna slap that, that ask again today, and it's gonna be fun time. So doing all that, and then I analyze this GNUS, right? Okay, so I look at my watches. I'm like, okay, GNUS is one stock that I see potential. So I saw GNUS and I saw this other stock, HUGE, right? Which we'll talk about as well. But particularly GNUS was one of my stocks that was on my watch list, and I already charted. And I want you guys to chart everything. You have to pre-plan ahead of time. Okay, now you have to also know, I don't know where everyone is in terms of, are you a full-time trader or are you just a guy that only has an hour or two in the market, that kind of guy, and yeah, I gotta work. Depending on what it is, you gotta pre-plan up to how far you can look into, right? So GNUS, we saw that the $5, this is a 3-month chart. I zoom out. Okay, whoopie-doo. So we saw that the stock has resistance here. Let's see here, $5. Okay, boom. See, that was the previous first thing that we need to start with. So $5, we broke it. So now I was like confident that $5 is gonna be the next area of support, as I've shown you guys that it's been riding that uptrend. So anyways, I drew a horizontal line at $5, and then what? The next resistance area at around 666 or so, right? Do you see that? Do you see how? So the way I find out the next areas that I look to sell, you guys are like, man, how does Dave do that? How does Dave know when to buy? And I mean, I'm not perfect, okay? But I'm pretty darn accurate, right? So what I look for is those areas that I see that it's gotten stuffed up the most. So I see that, okay, there's some resistance here. And, oops, that's the red line. I see the resistance here. And then I see the resistance. Oh, excuse me. That's not the first resistance. This is the $6. So natural resistance is going to be around the $6.05. So I don't actually do the actual, I just round it up. I mean, if a resistance at 605, do you really think I'm just going to wait until I sell at 605, guys? No, I'm going to sell before $6.05. In this case, $6 is a natural resistance number. So I want to make sure that, you know what, if the $5 breaks, I know I'm going to sell some of my shares around $5.95 or something like that. So there's one. And then, all right, so I'm thinking ahead, folks. I'm like, okay, so what if this stock just gets a lot more volume throughout the day and the $6 breaks? But people don't think that far, right? So then that's when they're like, I can't believe that stock is doing so much. So anyways, I'm like, okay, so if the $6 breaks, now I'm not expecting it, but if it does, okay, what's the next resistance? And then you're like, okay, so we got a little bit of this little here, and then what's all these lines? This right here, $8. So I'm like, $8. This was a double top. Okay, we don't have to worry about this right now. Okay, we worry about the area that tested the most, the next spike, and this was at $8. Okay, so $8 was a very significant number by just looking at this number. That is why, folks, why the GNUS was able to take it up to that far. Remember how we closed up to the high of the day was $8? The 888 is just an after hour number now. Now that because $8 broke, we are coming up to this mark. What's so significant about this mark? Let's go back and look at it. Look back to the 3-month. Look at this, focus this line. Let's see where this lines up. Oh, whoopie-doo. What is this? What is this? Oh, is it magic? No. 890 is already the resistance. So somebody sold at 888 after hours. How? So this is how it works, okay? So that's how you're able to supply the area. So I sold a little bit soon, right? I didn't want to risk it. I'm not much an after hour trade. I just wanted to go for the quick, little, lunch money, whatever you want to call it, and go for that and sell it at 860. Because you know what? But do you guys, does that make sense? You see all these areas right here? That is the areas. Now, what happens if 890 breaks? What's the next area? $10. $10. Oh, it doesn't matter if it's like 1014 or 1006. I still, in my mind, it's a natural whole number. So I'm like $10, no duh, right? We talk about how $5 is a strong number, and then $10 is also strong. Why? Because $10 is a new digit. Just like when you're trading micro penny stocks that are under $1 and they're coming up to $1, like MARA, right? Last week or the other day, MARA was at 98 cents and $1. That's a significant number, all right? Usually when you see those numbers breaking above, you will see the volume coming in. It's just how it works, okay? You have to adapt. You got to learn the game because other traders out there, they know the game. So they follow it. The more traders and the more people know the game, think about it. They know where to buy. So therefore, the volume is going to come in and the stock's going to blow up. Remember this. I said this earlier. If you missed this, I want everyone to know this. I want some people to write this down. The goal of stock trading, the goal of your entry is not buying at the lowest price. You have to get rid of that mindset right now today. The goal, so many people are like, oh man, I just want to buy at the lowest price. I want to get the bargain price. I get it. But the trick is to tell your brain, I need to buy the area, the area that's gonna explode, that's gonna boom, right? And where are those areas? Well, the $5 is one. It doesn't matter if it's going up. You buy it at the break of $5. That's the break of resistance. You can buy it back at the $5 because that's a strong support, and that's gonna cause what? Why is that area on the dip at $5 gonna explode? Because other smart traders are already looking to buy at $5, folks. So other traders are like putting in massive money, and the area that bounces again the most is gonna what? Explode up. And that's what happened here. Let's go back to how the day looked.
David, can I ask you a question?
Go ahead, buddy.
So on the dips, because I suck at dips. Like I've only caught a couple of them with luck.
Yeah.
So like, for example, you just said, so if 5 breaks, obviously now that becomes support. So let's say, you know, that the thing is like at 550 and you see it coming down, like in your head, picking up a dip would be at $5.
Yeah. So the previous, so it's not just, the number is not special in terms of the dips, right? I'm only using the previous resistance as support. And because I saw that 550, because again, that's a natural number, right? We go by every 25 cents with these plays. So 525, 550, I noticed that perfectly. 550, what? It got rejected right there, and it came back on down, right? To that $5. So that was another dip area. So that's why. Does that make sense, Jose? Or what am I? Yeah.
No. That makes perfect sense.
Okay.
Perfect.
Good.
Okay. I have a question.
Go ahead, Betty.
Well, if other smart traders know that it's going to explode at 5, who are the dumb traders that are going to follow that they can sell it to when it gets to 550? How do you anticipate having someone to sell it to at those higher levels? Like when you get above $10 or above $8 on this stock tonight, who's buying it at 860 at 4 o'clock?
Right. So let me explain to you guys, because you know there's a reason why I'm going through this first before telling you guys, because you know this lesson was supposed to be about, you know, hey, when is it right to average down on positions? Like, you know, okay. So here's the thing. First things first, guys. The general rule, especially if you're new, I don't want you guys to have this mindset, I gotta average down, okay? Usually, the general rule of thumb of trading, the top traders don't actually average down, okay? You know, I think Marley Chunger said this before. Marley Chunger said, you don't average down, you buy, you add in, you accumulate more, right? The reason why he says that is because it's a mindset, right? You don't add in on a losing play, you add in on a winning play. GNUS is a winning play. So let's say I bought it at $5 and it goes to $6 break. I will buy at $6. I will add again at $6, even though my average will go up. Why? Because this is a winning stock. This stock, I already pre-planned it knowing that the stock can hit up to $8 area, right? So I will add more positions. And so other people like me that may have more money, and it's not just the retail traders. If the stock has traded over like 400 million volume, guys, when was the last time you saw 400 million? There are some serious money players in here, guys. This isn't some guys with just $1 million. This is guys that are institutional traders, like some hedge fund traders that are coming in on these plays because they want to make money too. Some people, so you have to also think about, it's not just day traders getting in here scalping. There are also swing traders. Remember that the swing traders have been in since the earlier times thinking, oh, I'm just going to hold on till, you know, just ride it up. And there's also these momentum. There's also these different types of traders, right? In the market, shorters and all that. So does that make sense, Betty? So what I'm trying to say is people will continuously buy even if it's higher when they know the stock is a winning stock. They will scale up. Now, there are different types of traders out there, right? The guys that, the swing traders are the type of guys that will just buy low and they'll just ride it on up for a few days, right? Not taking any, well, I don't know. Some people may take some profits partially and they'll sell the rest. I personally think the smart traders must know how to scale out. The way I do it is I scale out. I always get in at that one there's a reason why pre-market is so important, because pre-market is a time well, first of all, to analyze everything and pre-plan ahead all the resistance and support areas. Second, it gives you the time and ability to buy in at a lower price. Meaning, you don't really want to let go all of your shares that you bought in at a lower price, guys, right? You know what you could do? You could keep at least 1,000 shares and then keep buying. You can keep buying, add in on these plays. Add your shares, increase your share size on winning plays. Okay, stocks that are still making higher lows and are consistently trading good volume. Okay, and what do I mean by consistently? I mean, you know, just if you look at the volume bars here, look at where the last time the stock went up this high, and look at where the stock had gone, look at how high the stock volume has, and then the lowest volume. So if you look at like this, right, in this morning, wasn't this pretty consistent in buying volume? Yeah, look at this. It's just, you know, nice fat candlesticks just continuously going through. Look at the other stock, Huge, for example. Huge wasn't getting the volume as much. Now, it was in the beginning because of this big fat move right here, right? We took advantage of. I think I led it for the 725, and this baby, literally from here on up, we took it on up, right? Right? And so this right here, if you look at also a 3-month chart, you can also go back and notice that the stock had resistance up to here, right? Why over here? This is the area, guys, that the stock has been trading and holding the most. And when it didn't hold, the stock fell out the longest out of anywhere here, right? So this is a significant area. Now, we could talk about here as well, and we can talk about this area, but why would we aim for $32? Because the 14 comes before 32, so we don't have to worry about that area. Right now, we can worry about, you know what, this stock can go on up to the area that held the most before. So you have to think previous support now is resistance, and vice versa. Previous resistance becomes support, previous support becomes resistance. Everybody, does that make sense? Are you guys with me?
Yes.
Okay. All right. Good. So let's go back to news. I want to make sure everybody is understanding when to. So I was talking about how you don't average in on a losing trade. Okay. And I can explain to you this GNUS is good to buy in more, or should we say average down or whatever. I wouldn't call it average down. I want to say you could add more positions. The reason why is because the stock is continuously making higher lows. What did I say? What's the key to be going into these by getting in more? So because this is what happens to a lot of you guys, not just you guys here, but a lot of the trading team members too. They just go in like 1,000 shares in the beginning of pre-markets, like, oh, you know, I'm scared, like, you know, I'm not sure if this is gonna really run. So you go in 1,000 shares, and then what you do is you sell out for like 25 cents because you didn't really plan it, right? First thing, why would you sell at 25 cents if you planned that the stock's gonna go higher lows? Does that make sense? It doesn't make sense. That means you didn't do your job of charting everything, and they just see it run, and you're like, oh crap. I mean, and then that's why all these traders are like, where's the next alert? Where's the next alert? Well, if you just look at the chart, this is the areas you can keep on loading. The ones that are trending on up, right? You buy here, you sell here. However, you're still holding the original shares, some of the shares here. Sell at the spike, you sell here. You know that $6 the next resistance. You could sell some here or add in when you see that the stock is what? Getting some nice volume. The MACD is crossing, right? And also the RSI. This was the RSI area right here, and we blew up, right? We dipped a little bit, but we blew up. So there's multiple things you can look into. All right, so averaging or adding more shares on a losing stock, losing volume momentum is a no-no. And what was a perfect example today? I think some of you guys probably were struggling with Huge. Right, Huge was, I gotta say, Huge was not easy. That's why I told the trading team, guys, if you're new, I don't want you to trade this because this is very volatile. All right, and not only that, let me tell you also another psychological factor why this particular stock didn't get as much high as it could have. I was actually looking forward to seeing if the stock could hit $17 because you see that 14 right here. If we can break 14, the next area here would have been around this this area around $17. You see how this this range right here, this channel, whatever you want to call it, this what is it? $17 right here. This is the area that the stock has been getting rejected the most. Okay, so this area. So I could have, if the $14 broke, I wanted to make sure the $17 broke. And if the $17 broke, I wanted to see if the stock could go up to about, you know, probably like 20 bucks, right? And if the $20 broke, I mean, I'm not looking into that one, but wherever the next area that, you know, again, had the most type of support. And now because we're coming up, we're going to be using that as resistance. I think now you guys get it. I've said it enough. Okay. And so in this case on huge, we got it early. It got a very nice spike here. Does that make sense? Look at all these green candles. And then what happened? The trend line cracked. We hit up to $12.88. Okay. I sold that early, as in when it did hit the target. I think the target was actually $8. I guess technically I didn't really sell it early. I sold it at a little bit higher because I saw that the stock was still getting nice volume right here, still riding higher lows. I didn't necessarily buy more in this case. I just went in already a pretty good amount on huge in the beginning, and then just wrote it up because the stock, you know, literally was just ripping. And I'll tell you, it ran up really fast. Okay.
You said buy at the break of 7 and sell at 7:40 to 8.
Right.
So did you sell some of your stock at when it hit 8, and then as later it kept on going, and we had.
Honestly, yeah, I see what you mean, Betty. In this case, this one ran up really fast for me to even type out that I was even scaling. I don't think I actually just. This is kind of funny. I was actually getting water, and this stock just actually started really blowing up. So I'm just like, oh crap. And the stock by the time I was coming back was at around $9. So I was able to sell at around $9.20. But I noticed that the stock was continuously going up. So therefore, that's when I was like, okay, you know, I already charted. The stock did have potential to 14, so I'm just going to go for the 1140. And why was it 1140, guys?
Yes, it was 1140. It was, and that was like 8 minutes after the first alert at 4:59.
And why did I choose 1140? Because of this. Right, this last spike, right? This last spike right here. So we were at, this is today's trading day. Before it came up,
you alerted 1 minute before the pre-market.
Also, why do you think I left $8, guys? Because this is a 200 EMA. I want everyone to pay attention to the 200 EMA as well. Okay, when you're looking at the 3-month chart or the daily chart, whatever, you look at the 200 EMA. This is an area, a very critical area for stocks to break, or if it doesn't break, the stock is done. Okay, that is why I was able to figure out this is the $8 next area. This also area have a resistance area. So what happens if the $8 breaks here? Well, I knew that this 1140 was going to be our next area to break to what? 14 bucks. And did we hit technically 14 bucks? Let's see. I mean, you know, based on some, not everyone was able to fill it in, but huge. Look at the high. I'm showing it to you guys right now. 14.
Yeah.
You know?
Yeah, you said 1140 and sell at 13 to 17.
Yeah. So what happened? It didn't go to 17, obviously, but it did hit the first target at 13. Some of you weren't able to sell it because what happened? The stock got halted. So I think when the stock got halted, I think a lot of you guys, not a lot of you guys, I don't know. Some of you may not have played huge, but some people didn't know what to do. So they were just like putting in a market order for sell, and they were like, when it got unhalted, what happens when people sell at the market? Whatever the price is showing on the level 2 is going to get filled. Someone could put it as low as $8 and you could get sold out at $8. I've had that happen before. So it's very, very not smart if you put a market sell order just on pending, and the moment it unholds, the market makers are just going to fill you at the lowest price, wherever someone's ready to buy. Does that make sense? So you have to put a limit order. So what the limit order was, what, $13, right? And I had a couple people showing me that they got filled, right? They sold at $12.50, $13. I'm not sure about any more than that. I'm not sure whoever got 14 or not. But does that make sense? The idea of it is that, you know, we did get up to that point. You see,
right. Then the next problem with that stock was when it went down to around $10 and hung around there for, I don't know, 30, 45 minutes, whatever. And I started saying, what about it? What's it doing? And
so let's talk about that.
Yeah, and you said, what are you worried about? You know, $10 is the next
Right. So
support.
exactly. And the reason why is $10, it was, again, the resistance, and now it's a support. And therefore, now here's the thing. For some of you that were smart enough, this was the ideal area for you to have, well, the first 10. This was the ideal area for you to have cut, right? Why? Because the trend line cracked. And not only that, if you got in so low at $7, why would you not take it? So it makes sense for you to have been out on this move. We got in early, we're good. Now, for those that decided not to sell it, this was the area to and then what happened? The trend line cracked. Look at this move right here. This is trading sideways. Where's the volume? What happened to the volume? It's like dead. There's no volume. So what happens if the stock is trading sideways? There's about 90% chance, I say, that the stock is going to go down, right? There's a high probability chance that the stock is going like this sideways. Don't be in, because what happens is, just like anyone else, when people get impatient, what do people do? They make irrational decisions. They get impatient, like, man, what is this? And then guess what? They get even more irritated when they hear some other stock like GNUS or WISA, and the scanners are going up, and Holly's like, WISA. And that thing is going up, and everyone's like, oh my gosh, I'm making money. And you're stuck here. Do you think people are going to still stick around here, just staying here? No, they're going to sell. So what happened? People got impatient and they sold. That's what happens most of the time. So never ever keep on holding stocks or trading stocks this long. So anyways, however, for those that were still thinking about holding, I think when I got into the 1140, actually, I think I still had some shares on I was playing on my mid account now. I made good money on my large mid account. I played on my large account. I played on the mid account. And then this stock came down to $10. And you can see here that $10 was the area that we needed to hold. The $10 held, so I just held the $10. And what happened? It bounced eventually. Correct?
Yeah, that bounce was a big surprise. I thought, man, you even got worried about the volume.
Right. I mean, like I said, this was not an easy play. I'll tell you that. I mean, I was thinking about cutting it very soon once I saw that the stock kind of kissed a little bit at 980. So I was like, man, I was like right there on the button. I'm like, I put a limit sell like at like 970. I'm like, you know what? If this comes down to even 970, I'm just gonna be out. Because I don't feel comfortable. And I'm just gonna be out. So I already told my brain, like, you know what? I'm just gonna sell at 970 if it comes down here. But it didn't. It held at $10, and I finally saw that the volume and the market was coming up to a market opening, and people came back in, and we got a nice squeeze. So this was your mercy exit. Now what happened? Market opens on up. It got halted and stuff like that. It's very difficult when you see a stock getting halted multiple times. People get bored. People get impatient. The momentum gets killed. You got to remember, guys, these stocks, this is not like Amazon or Google. Okay, now going back to the averaging up and all that. You can average down on stocks, say, like if you were playing on a blue chip stock, very solid stocks like Amazon, but most people don't trade Amazon. Why? Because they're expensive stocks. Most people don't have a lot of money, right? So they're not going to be able to trade. Most people are going to be playing stocks they can afford, right? And something like Huge is affordable, right? Because they're only like $10 a share, whatever in this case. Anyways, so when you are in the middle of a play and you're seeing the volume just absolutely decreasing like this, should you average down at, should you still be in average down at, let's say, your rule is, I don't know, I'm just going to average down at this 200 EMA. Okay, let's just say you average down at 200 EMA. You saw that it got unhalted. The stock came down to $10 again. You're like, oh, that 200 EMA is at $10. You buy. You buy more at $10. So now your average is like, say, $11. Like, okay, well, I still got to sell it to $11. It does go to $11. Okay, but you still have half. Notice that the stock is now down, cracking $10. Did we ever crack this hard before? No, we didn't. So where did we go? It soared down to 860. Let's just say a scenario, a trader, you didn't sell, and you notice that this is a support now. You see the stock trading sideways once again. Oh boy, trading sideways once again. But what happens? The stock decides to, in this case, break back above the 50 EMA. This was a key area here. Okay, the 50 EMA, I think I said earlier this morning, I said look for a wave pattern. The wave pattern is when the stock cracks the 50 EMA and then gets back above the 50 EMA and then holds the 50 EMA and then bounces on up. However, what happened here? The 50 EMA did not bounce from that moment that it cracked back up or bounced back up, and then what? It soared down. This is a failed wave. Does that make sense? So this is the stock that you do not want to be averaging down in. This is a losing trade. This was a losing trade. You had already one trend line crack. If you see multiple stocks cracking trend lines like this, pretty bad like this, especially at the market opening and drop like this, this is a tough one because this was an unhalt. And so when it got unhalted, the stock prices just opened up at $10. So this isn't, we don't see a lot of stocks doing this every day. So you don't have to worry about it. But next time when you guys remember a stock that's losing volume and it's not getting to the target prices, just cut it off. Okay. So I want everyone to just keep in mind, increase your position size on stocks that are continuously trading more volume, and then cash out once the stock reaches its peak. Okay. And what I mean by its peak is when the stock like GNUS reaches its overbought territories. So let's see if we can catch another examples here. So what I also do is not only do I draw like these trend lines on the charts, I draw trend lines on the RSI. I want you guys to get in a habit of that. Look for the areas that have the higher humps. Look at this. So you know that this RSI about 89 or 90, this is known to be pretty strong. So we go back. So we now know the 90 RSI. Next time when the stock comes up to 99, 90, that is going to be the area we're going to sell or before. Just like kind of resistance areas. You see how this works? Now we not only look at the top, we also got to look at the dip opportunities. Well, what was the history here? The history shows that the stock last time when it comes here, let's see here. Okay, we got something similar right here. The stock came down here. Let's see, if it comes down here, we see the stock coming down around right here. So let's just see what happens. So the way I do it, I go back a few days, a day or two, and then I see where the RSI has been holding on up the most or not. And so you can see here, let's see here. These are the areas you can see having a hard time. So in this case, when I see that, so the very first time, I was just to stick with the day's lowest RSI and where it bounced the most. So in this case, this is 36. So I drew that there. And now you know that the stocks, the best areas to buy are the oversold areas in this particular place here. And the best areas to sell are when the stocks go around this RSI. And just kind of take a look. It doesn't have to be perfect. Look, you see how the stock, okay, you can see that those are rejections, overbought areas. Sometimes, guys, I don't even look at the level twos or this stuff. When I feel like, man, I just want to like, this is what I do. Look, this is all I do. This is what I do. Literally, I do this. And I'm just looking at the RSI. Not only the RSI, but I'm also looking at the MACD. And I'm looking at these volume areas, right? So I'm looking at multiple things. I first look at the RSI a little bit. I'm like, okay, around this RSI, when it comes down, it's going to be around this VWAP area. See how that works? And around this VWAP area, it's going to bounce because the RSI last time, we held this last time, okay? And now I'm going to go ahead and look, and I'm going to look to sell when the RSI comes up to this mark. That's my max area that I'm going to sell. So I'm going to scale up right here as well. See that? Around this area, this RSI right here, I see that the stock's going to come back on down. I sell out. I'm going to go back in when it comes down to around this RSI. So comes down to this RSI right here. That's another dip. You sell here, you can buy here as well. This is I'm teaching you guys this in case you guys want to learn how to trade by just looking at the RSI.
Well, but you can't forecast that RSI until it gets there, right?
Right, but you see, that's the thing. This is already the morning though. Now that you know the morning time where it got rejected, this is an area that you know that you don't want to be stolen, right? And the moment that it comes down here, right, you can already point out, draw this line right here. Draw that line right there, and you know that, you know what, you probably don't really want this RSI to go down below this area. That means that what? The stock is going to be really, somebody's selling in large quantities, and the reasons could be because maybe they have offering, maybe someone out there is a large investor that they don't feel comfortable holding. Something's up, right? That's what scares these retail traders when they see large orders, right, getting sold off, or and that's going to be another lesson. Like, not everything you guys see on the level 2 is going to be true. What I mean by that is there are traders out there that hides their shares. It's called hidden orders, right? And we'll go over that next time. But hidden orders are basically people that doesn't want to reveal to the retail traders what their positions are. If you have, let's say, $150,000 worth of shares on a low flow stock, and you decide to just sell at the market, people are going to see that on the level too. Do you think the retail traders are going to be happy about that? No, they're not going to be happy, and they're going to be freaking out. Holy crap. $150,000 worth of shares are all just sold out. Why? They're just going to be confused. People are just going to be selling out. Everyone's getting scared and just all selling out. And that's what the stock price, even when the stock chart looks good, when people do that, it ruins the chart. And that's how when the stock could go on a wrong position. So anyways, just take a look at how the RSI is just perfectly around this area here. That's another great area to have sold. It comes back on down, holds around these areas. You could just be scalping every single time it bounced around these areas. But you see the range right here. Not only that, you can draw the middle range as well. So let's say, this right here. This is the area here last time when it tests this here, right? It comes down and comes over here. Last time it passed here, just like this, it comes down here and it gets rejected here. Okay, so this isn't like something, this is something you guys have to keep practicing every single day. This is not, you're not gonna get this just overnight. You just have to practice every single day, drawing these RSI support lines and areas. So my point here on this lesson I want to teach you guys is when a stock is uptrending like this, right? And this is an area, why? Because this was an oversold territory. So you draw yourself this area right here and you draw a nice uptrend line. This is the areas that you can add in. Let's say you sold here, you buy more here. You see the stock continues making higher lows, you sell here. Why? This is the peak near the RSI. Sell it. Stock comes back on down, you don't touch anything, you buy here again at 661. Why? This was the area that I kind of start holding. Now it did kind of crack a little bit, but it's still held. It's not going to be magic perfect, but it's still held. How can you? That's why you don't want to rely on one indicator. You want to confirm it with this indicator right here, which is a trend line. You notice that this is double bottom as well on the charts, and it's holding above the uptrend. You buy here again, while holding some of the shares that you still bought at this $5, $6, whatever range area, and you keep on scaling out and scaling in. Scaling in right here again, and then scaling out right here when the stock blew up. Why? That's the RSI that last time we drew. And then what? I think that was a peak right there, $8. It attempted to do $8 break again towards the closing. This was very interesting. I don't think I've seen a stock hitting $8. I sold out at 8, and then the stock held around this RSI again, and then what? It got a magic pop here again. And oh, what was this line right here? I drew that already earlier because that was the same pattern that I was doing. Again, you just got to look at it. It's not easy to look at, but once you guys kind of just look at the pattern a little bit, it doesn't have to be very precise. Just look at how the RSIs are moving. And that is how I'm able to maximize my profits and be able to find these lower entries by using the RSI. Now, is RSI the only thing that I use? No. But RSI is a new indicator that I've been using lately more, and it's been working out very well. So that's why I'm sharing with you guys more closely as I go through these things. Does that make sense? And this is this is how you add in more positions, guys. Not on stocks that are downtrending and you're still holding and hoping and man, God, Father, please, whatever, like, let's just go up. That's not how it is. The trick is the top traders, they don't care. They want to be snipers. They want to add in more shares. They give confidence to other buyers. Don't go in on stocks that are losing volume and stuff like that. Any questions? I've been talking for a while straight up here.
Well, then we aren't, as day traders, driving the price up. You're saying that probably some of the big traders are driving the price up at the higher levels or throughout the day.
No, retail traders are involved as well. So it's really going to be a combination. You're not going to see, let's say, I don't know, what's a good example of a really not the best. I mean, the thing is, guys, like I say, this market is crazy. It's getting a lot of new traders in, right? That's a lot of retail traders, guys like you and I, guys that are now losing jobs. They're all like, man, I'm just going to stay home. I need a job. I need to make money. And this guy right here, is killing it. So everyone's coming in. So that's why this volume, when was the last time we saw another stock going over 100 million? over and over again. Very recently, we've been seeing a lot of stocks trading. Let's see. We got CIDM, even CIDM, a little $1 stock. Look at this. Oh my gosh, this stock just, kept going on up. I mentioned that CIDM, I believe, is related with this GSUM. So that's why you're going to see the stock kind of following along. It's what we call sympathy play, I believe. And then, I'm kind of losing thoughts here. But anyways, I want to make sure that everyone kind of understood what I was kind of saying. Is anyone lost? Does that make sense a little bit? The idea of looking at the RSI. I want to see someone else getting on the voice as well. Betty, if you don't have any questions, does that make sense, Betty? Did that help a little bit?
Helps a lot.
Okay, great.
It's a much deeper, bigger picture was what I've been.
And that is why, because the more indicators that tells you like that it's bullish, that there's a stock, this is a winning stock. That is how I'm able to like get a larger position. And again, here's the thing. You still have to do the trading plan. Like, okay, so what am I going to do? Like, am I really going to be just, buying here and then selling here? But then, you got to plan ahead. What happens? Are you going to keep holding if the trend line cracks? No, you're going to have to go ahead and sell. But, even if you make that one bad trade, if you've been making these, in and out, scaling in, scaling out, and you make that one mistake, you're still good because you've already been riding on up and scaling out, that you're only going to become a winner even if you make that one boot. Does that make sense? Now, unless you are seriously
what about all these people who've lost their jobs and they're new to the market and day trading and they don't know what they're doing or they're learning? Are they going to skew some of your applications and some of your the ways of doing things, the charts and patterns, because of their ignorance and volume? And
that's a good question. I mean, I don't think the way I see it is, obviously most traders don't do well and they fail more percentage of them because they come in thinking that this is very easy, that they can buy it. They don't have a real strategy. The guys that you guys are here, you guys now can see what this is all about. Like, you guys know the MACD, the RSI, the volume. The guys that are coming in, they have no clue. So they're going to just sell based on their emotions. And the emotions work very well because the market is very manipulative, right? So they're going to sell. They're going to get it on a FOMO. They're going to buy when we sell. And they're going to sell when we buy. Because it's just how the market works. It's just the fear and the greed. You'll see how perfectly, like not perfectly, but very, very similarly, these price actions are human behaviors. And a lot of people that doesn't know how to read charts, that doesn't have risk management, they're literally, and I'm telling you this based on my experience, when I didn't know anything about this stuff, I will be buying literally. That's why you guys ever had that moment where you're like, dang it, man, every single time I buy, the stock crashes. What is wrong with my luck? It's not just you. It's literally everybody, because that's how the psychology of the market works. These other guys that are smarter than us, that with these institutions, algorithms, and all that, they can see that. They can see that these stocks, people are, and they're sometimes they have that manipulation. They're shaking people out. Like these areas, sometimes, people they don't even know these EMA areas. So they might be like, oh my gosh, I gotta sell because, it's not holding, and then stuff like that. So. Let's see here if I missed anyone. Agree, I have a strategy for small shares. The trader would like to continue riding the stock on up, but it's trading small share size. That looks great on small accounts. Yes, Steve has been excellent with his small account growth as well. Brownie says, makes great sense. I'm going to give it a shot. Seems easy enough to chart the RSI as another indicator of almost good. Yeah. Again, this RSI stuff is again, not something I learned from a book or watching a YouTube video. This is, for me personally, I came up with by just testing these indicators. So like that's why I say it. Over the years, you just test out all these indicators. But look at all these indicators, these tools you have from A to Z. You got this accumulative swing index, elder force index. God knows what that is. Ravi. I mean, look at all these different ones. Now, I'm gonna use what I like, what's working for me, and the RSI. Using the MACD, the volume, the trend lines, the EMAs, all this combination, like it's a killer combo in my opinion, for me at least. So that's how I've been consistently, profiting. Now, obviously, there's more to, we can talk about more side of the risk management, because I feel like some of you are still struggling with the risk management, but I think we can talk about that on the next lesson. I wanted to, this particular lesson where you guys can see how to average in on a winning stock. So SEIVA, in this case also, let's do one more example, and then we'll do like questions and answers on Q&A session here. So in this case, SEIVA, we can just figure out that the stock has been what? Just literally trending on up, and this is considered a winning stock. This is a stock where, let's say you bought it here at 250, the stock does come up to 325, you scale out right here, right? Because why? Let's see. Look at the RSI right here. Oh man, the wrong one. Let's do another example. Maybe you might think, oh, that was just a lucky, that was just a lucky little thing. All right, so let's see. Okay, so this right here, I'm gonna mark it as an RSI. Why? Let's just say we don't even know what's gonna happen here. We only see this part of the move. But I noticed that the RSI overall is very overbought. 94 on the RSI, my goodness. And you see all this shadow right here, this is seriously overbought. So, you know, you're gonna just find out the last time it went up and it started to go down, no problem. I'm gonna use that as a reference for the next move. Let's just see. Okay, so next thing you know, all right, the stock comes down to, let's see here. This is a market opening. So there's multiple spots here. So we got one here, we got one here. Okay, so you can see this area right here is overbought as well, but you don't just look at this. How do you determine whether or not can this thing just head up a little bit more? This trend line right there, right? Where is this right there? Yeah, it started to crack the 10 EMA and the trend line, and that's when you see the RSI cooling off all the way down, and this is where you see the last time it started bouncing off, which is around this VWAP line. So we know now the VWAP is this 25 RSI right here, and then we sell it out here again. How did you know, Mr. I, to buy here around this area here and then sell here? Well, not only that, it's downtrending. It's not really breaking this 345 resistance as well. How did we get this line here? Well, because again, that was the area last time the stock, where did I find that one? This right here. In the past, the stock was having some serious resistance here. What do we talk about having resistance, you know, in the past? That is also gonna show in the history as resistance, right? So what happens is the resistance breaks, you can see the stock coming back on up a little bit. So I mean, yes, you see what I'm saying here? It really helps you out a lot. Now, don't just look at the RSI, look at the trend lines here. Look at the moment here it started to downtrend back on up, or uptrend. From the 200 EMA, you know, the 200 EMA is a great area here, okay? This was a confirmation right here. This $3.05. Why? Why? Because this was the area right here that it really hit the bottom right here. Okay, and then the 200 EMA held, and this time the RSI didn't come all the way down here. So now we know that support is building higher lows. Same thing with the RSI. Now the moment you see this area breaking again, that's when you can keep on riding more. So you're watching the RSI. Now you know, oh, this peak hit. Why did this peak hit? Because look, you see this area right here? Last time it kind of popped on up and hit the peak. That's another peak right there, right? So it comes down, peaks again, but then the RSI is, it means that what? If the RSI is going up, it means there's buyers. There's buying volume. That's why it gets overbought when there's too much buyers. Does that make sense? I want to make sure everyone understands that. This ideal RSI, when it gets higher and higher, it just means there are more buyers. When the RSI gets so low, it just means there's a lot of selling. That's why it's called oversold areas. And these are the oversold areas they see as an opportunity. When the stock is so oversold, people are going to be looking to buy the dips and sell the spikes. So I'm just giving you guys a general idea that RSI has been working for me, and you can use it in a combination with your trend lines. Try it out, guys. Try it out. Try it out with your, you know, whatever your other indicators you use. I highly encourage it. I think you guys are going to see some phenomenal results if you guys start, you know, being having more confidence by looking at these areas. Okay, so yeah, Tina says, Tina even said, yeah, the RSI was even making higher lows here. So sometimes what I do is, I don't do this often, but sometimes, I mean, you can even draw yourself an RSI trend line, you know what I mean? If you want to. So that way you just kind of know. So it's like almost using a second chart, but you're like comparing the first chart and the second chart and use it in a combination. And I'm telling you, the combos are phenomenal, right? You don't want to just rely on one thing. So any questions so far, guys? I want to talk to you guys more. Let me see how.
David, I have a question.
Go ahead, man.
If you don't mind me asking, and Rocket Rod as well, and Alan.
Yeah.
You guys always use hotkeys for entering your trades?
I personally don't, because I just been so used to just clicking, and I just have like very fast OG way, you know. I'm just used to that, you know what I mean? So I never really got into the hotkeys personally for me. Now I think hotkeys are very good for people that are kind of having more trouble, or people that are at work and they're like, they don't want the bosses to see. I mean, I just been a full-time trader for, you know, 8 years. You know, I've been at this for a while, you know what I mean? So I don't really get into the hotkeys. But I think, Steve, if you want to share with us what your strategies are, because I think you're using a tool called Stream Deck, which I'm kind of interested in as well. But I mean, I'm just doing what's working for me, you know what I mean? So I'm not looking to change anything. Alan is smiling. I don't know why Alan's smiling. What you guys smiling about?
Sure. I use a Stream Deck, and I have five keys on my Stream Deck. I have for buys, and then I have 5 keys that are set up for sell. And it really helps for me being able to get in and out of trades extremely fast, and also to be able to reverse position or add in and scale out. It's so simple with a touch of a button, as opposed to having a work an order with a mouse and click and fill and everything else. They're just pre-programmed. So it makes it simple. If let's say that I'm going to start a trade, and I'll just use 1,000. Let's say I'm going to start a position at 1,000 shares. You know, I can go ahead and start it at 1,000, and as it goes up, I can just continue to click on 1,000, 1,000, 1,000, 1,000, 1,000, and keep adding shares in with just touching a button, as opposed to if I was doing it just on a normal platform with the, with the order form, I'd have to be filling that in each time. You know, of course, there's a default you can set up on the platform that, it has a whatever default values that you would have in there, but you don't really have an option. I mean, for me, I have, I have my keys set up on my buy. Let's see, they are now, I have 500, 1,000, 3,000, and 5,000, and 10,000 for my shares on my buys. And then on the sell, I have 500, 1,000, and 5,000. I've increased those lately because I've started to trade much larger share sizes overall. But I was working earlier with someone here, Elise, I believe, and I had different sizes set up on my Stream Deck before when I worked with a smaller account. Yeah, it really helps getting in and out of trades. I mean, you can just. I mean, there's days. Most of the time, I don't even mess with any of the orders with my mouse or anything like that. I work it all with my left hand on the Stream Deck, and I got my mouse in my right hand, and I can do an entire trade and only touch my Stream Deck.
Yeah.
Get in, get out, and I have my hotkeys are set up. My buys are set up to buy on the ask plus 1 cent. Doing that, it seems like my fills I always get filled. Then my sells are, I sell on the bid minus 1 cent. And doing that, I can always get, it seems like my fills, no matter what size they are, my trades, my orders, that I always get filled, and I have good luck with that. And the other thing that I've noticed with the Stream Deck is, it seems for whatever reason, it seems like that that it's actually faster. The action is faster than working with a mouse on an order form, clicking the buy or sell button, as far as just the execution of it. So, you know, what I recommend a Stream Deck, I'd recommend it to everybody, including David. I've been trying to, we've talked to him about it, but, you know, he's dyed in the wool. You know, he's been doing it so long. I finally got Alan converted, and he'll never go back. He hasn't looked back since, and he swears by it as I do. And I guarantee once we get Dave converted, he'll be there too. It's just, not only is it convenient, but it's extremely useful when you're building a position and when you're trying to scale out, because you can scale in and out so much faster and easier, and have many options, because you can scale in, say, okay, I just want to scale in 500 here. Or I look at the ask and say, I'm going to slap this ask. And I look and there's an ask sitting there at whatever, 3,500 shares or something. I can hit my 5,000 button and knock out that ask real quick. Whereas I may have to, sit there on my order form and, write in, type in the amount of shares I'm going to do. And it's going too fast. The trading is evolving too fast as it's going along, that you want to keep it going. And, taking the time to try to fill out an order form, to do all these things, you can't really, you can be much more effective scaling in and out with a Stream Deck setup than you can, operating just the order form there. So Alan, what do you think about that?
Yeah, I got a question. Joker Poker wants to know, how do you feel about buying the ask with a stock like huge today when the spread was big? There was a big spread. How do you manage that?
Okay, so one of the things that I learned, I was taught a bit ago, was when you have a big spread on a stock, you have to do what's called trading in the spread, right? You have to trade in the spread. So let's say that the thing had a 20-cent spread. Okay, let's say it was 20 cents. I forget what it was today. I had a not so good trade on huge today, but I forget what the spread was. But anyway, the strategy on buying on a big spread is you would buy on the bid plus, let's just use a number because we see it all the time where it's 25 cents, 30 cents. What I do is I buy on the bid plus like 10 cents. Okay. So that means I'm trading between the bid and the ask. I'm trading in between. I'm not buying on the ask. I'm not buying on the bid, which would be the high and low that you would try to enter. So I'm buying in the middle. Well, doing that, there's a lot of, your orders, somebody will, going up and down, the way the stock goes up and down, I'm trying to articulate this. The way that the stock would be, the pricing goes up and down, your order would get filled in between there, regardless of what it says on the bid and the ask. So that's the way that I trade it. I put just based on the spread. It might be bid plus 5 cents, bid plus 10 cents. I've done bid plus 25 cents when it's been a huge spread, and I've done bid plus 25 cents and got in. And then when I go to get out, right? Naturally, I don't want to sell on the bid, so I'll sell out on. I might try to sell out on ask minus. I'll do an ask minus, 10 cents, or something like that, to get out, because there's so many prices going in and out, and that's trading in the spread. You're trading in between. You're not trading on the bid and the ask. You're trading in between.
Yeah.
So does that make sense?
Yeah. I mean,
Yes.
You might not. When we play that Joker Poker, we were probably not using our hotkeys on that because our hotkeys are pre-programmed. So we would switch to our level 2 or our order window and set it up manually.
Very, very good point. Very, very good point there is that you know, those are special circumstances. And, you know, a Stream Deck hotkey setup is not going to cover that. It's going to cover 90% of what you're doing. There, you know, there's certain times you have to set up a conditional order, you know, or one cancels the other order, you know, or you want to attach a trailing stop or do something like that, that you are. And that's the reason that you have your Stream Deck set up and you learn to operate it with your left hand and you got your mouse in your right hand, right? So you can sit there and you can work your order form and you can work your Stream Deck and, you know, with, you know, and you basically got your trading happening in both hands rather than trying to work the whole thing, you know, with just your mouse on the order form. So, you know, I find that, you know, doing that, it works quite well. But a Stream Deck will cover 90% of the situations that you're going to encounter on a trade. Only the things like trading in the spread, only things like, you know, having to add a trailing stop to something or having to add a stop loss somewhere if you're going to do that, you know, or, you know, any of the other things, you're going to write up a conditional order to where, you know, you enter, and if your trade gets accepted, it immediately posts a, you know, a limit order for your sell, you know, so you can only, you know, as soon as your order goes in, it activates, and then you immediately, it sets a sell order right away. So I'm in the process right now of setting up something that on my Stream Deck, and that's where I want to be able to do an order, right? And it's a common order, and it's whenever you're working something like where you're trying to slap a stock to move it up. Okay, this is talking about if you're, it's not really going to matter if you're trading 500 shares. If you're trading a smaller account, it wouldn't be something that you would be doing because you're not trading large enough shares to be able to slap the ask to make it work, right? To move it up. But if you're trying to move a stock and you're trading larger shares, what you want to be able to do is you want to be able to use I think Cousin Eddie touched on this before on one of his. What you want to be able to do is you want to be able to use slapping the ask as a tool, not as building your position. You originally engineer your starter position. Let's say that my starter position, I'm gonna go in and I'm gonna say I want 10,000 shares of this, and I'm gonna start at that level. So I buy at my original buy-in. I start low. I get 10,000 shares or whatever, and I take off on it. And the stock starts moving up, and I say, okay, I'm going to slap it. Well, I don't want to keep slapping it and keep accumulating these shares without being able to scale out. So I want to be able to scale in and immediately scale out. So what I'm setting up on my Stream Deck is a key that when I buy on the ask, it immediately attaches a limit sell order, and I'll put that limit sell at 5 to 7 cents above what that buy-in was. So let's say that we came up and we were trading a stock. There was 550 resistance, and we're at 548, 549, and I say that's it. I'm going to slap it. Well, when I slap it, it instantly generates on the buy. As soon as that buy executes, it would instantly execute and put in place a sell order at 555 or 557, right? So instantly those shares, let's say I slapped at 5,000, those 5,000 shares would have a 5,000 sell order at 555, 557. Now those execute, I make 5 cents, 7 cents on those 5,000 shares, but I'm still holding my original 10,000 shares from down low. All right, and I just continue to do this moving up. So when it finally gets to the top, let's say I started that position, let's say I started it at the break of $5, and we continued to go on up, and I was looking for, we were just riding it up as high as we can go. When it finally gets up there, let's say my target was $6 and I wanted to get out at $5.97. Well, when I get to $5.97, what am I going to be getting out with? I'm not going to be getting out with 25,000 shares or 50,000 shares, I'm going to be getting out with my original 10,000 shares, because along the way, I'll have slapped this stock and have taken my 5 cents, 7 cents along the way. So I slap it 5, it moves 5 cents, 7 cents. I take that profit, it keeps moving up. If it starts to stall again, I'll slap it again and keep moving up each level. So at each of the, each spot on the resistance to keep moving it up, that's when you slap it. And that's when you, once it breaks that, right? Let's say it was 575. Well, it's that, then what you're looking at now, everybody's looking for $6, but you got to get it into the 80s before it really takes off. So, once you slap it, you get it in there, you might have to do it 2 or 3 times. But each time I do that, let's say it's 5,000, 5,000, 5,000. I might generate one cell at 582, another cell gets generated at 584, and another one gets generated at 586. So over the course of 6 cents, I might buy and sell, from 575, 577, 579, I might be trading 15,000 shares over that time and be in and out by the 584 comes around. And now I'm back to my original 10,000 shares. So am I being long-winded about it? I'm trying to kind of explain.
No, that's good. You're just, yeah, I mean, I'm sure there's some people here that you're speaking to. I'm sure some people, it might be a bit over their head. It's a bit of advanced strategy. I will say that for sure. People, maybe they don't realize, that, we help that when we did it a couple times in the gold room where everybody was like, okay, we're going to go at it. And we had Dave, myself, and you, and I'm sure there's a couple other people, but we're like, we're going to slap this and we're going to move this stock. Like we were causing that run,
That's right.
And helping
That's
them
right.
If we weren't there, we knew it was just going to get stuffed. And then, nobody else was stepping up to the plate. But, so that was a great time. So, but yeah, and you guys got to realize that when you get to that level and you get, even $50,000 in account or something like that, you get leverage, like you can really throw some weight around and cause some things to move and not necessarily manipulate it, but that's what you are. You're making it do what you want. All these other people that are playing 100 or 500 shares, I mean, they're not nothing. So, and you get a couple people, or a team doing it as well. I mean, really the probability and percentage of winning, even goes higher, as our team gets bigger. So, I mean, I think you all realize that. But yeah, no, advanced strategy. Lee's got a question too, just moving back.
I was just reading that question. It's, if you were buying the break of $6 using hotkeys, are you watching the bid and ask closing, and once it breaks? Okay, so let's say that, I'm really not one to be putting in, I work my trades off my Stream Deck. I don't really put in stop limit orders anymore as far as let's say it's a break of 6. I don't put in 602 and then put my put a limit 602 on my stop at 604. Personally, I don't do that anymore. What I do, and I think Alan does it the same thing. We talked about this and we kind of came up with this with the Stream Deck, is we watch the ask, and we watch the ask get eaten up. So let's say that you've got 15,000 shares sitting there at $6, and you're watching it get eaten up. Well, when that thing, I'll tell you what I do. When that thing gets down to about 4,000 shares, I hit my 10,000 button, and I just whack it, and I just eat that last bit. I just eat it up. Now I've actually caused the break, so I'm already in. So if you with a Stream Deck, it seems much easier to be able to do that because you're buying on the ask +1.
Yeah, you got the range of a stop limit order technically with that button. So you can sit there and watch it printing. I know Dave and all our alerts, we talk about buying, 2 cents above. Well, that's what we do. As soon as that thing's printing, because these are resistant break plays. So pretty much every time there's resistance, there's some type of wall. And, these whole numbers every 25 cents, there's a wall there. And we're watching that. And as soon as that starts printing and the tape really starts moving, we just slam the button, and that's good. You're good to go. But, and Rocket Rod, maybe you can get into the strategy of, okay, well, what if it does just barely break and start to come back down? How do you manage that?
Okay, so this is actually something that Alan and I got into a fairly long discussion about today. Was what we've noticed lately on the breakout plays is something that's kind of developed, and it hadn't been that way. And what I'm talking about is clean breaks. We used to get a lot of clean breaks on the breakout alerts and stuff. And what Alan and I have noticed that's been happening over the past couple of weeks is, and I'm not quite certain why. I have some theories about it, but one of the things I've noticed is that it'll break out. We'll get the breakout, and it'll just run up maybe 5 or 10 cents, right? Maybe we're playing the break is 6, and the target is, our PT is 620 to 640, and the thing will run up and it'll hit 608, 610, and then it pulls back, and it pulls back down maybe 590, 585. Well, if you're playing with the stop like I do, I'm playing 10, 15 cents, right? Well, that would be a sign to bail out. Well, I've been finding that lately I've been really much more busy with playing alerts, breakout alerts, because my theory is that there's a lot more people, and I'm not just talking about people in this group. I'm talking about the traders overall. I think are front loading these resistance areas much more. So that is to say that I think you were getting a lot more people buying in when they see resistance coming up and the stock is moving, right? Stock is moving pretty good. They see the resistance area coming up. A lot of people, right, and not necessarily experienced traders, because experienced traders are not going to be front loading resistance areas. But there's a lot of inexperienced traders out there right now that, because of what the social situation that's been happening, right? There's a lot of more inexperienced traders, and they have the mindset, oh, I'm going to pick up another 5, 10 cents. So they front load this. They front load the resistance areas because they know $6 is going to be the breakout. That's going to be the resistance. I'm the only one thinking this, so I'm going to jump in here and get ahead of everybody. Well, think about how many traders there are. And what I've noticed is that we'll get that. We've been getting a lot more of those pops just over the resistance area, and then it pulls back. And why? Well, if you got a lot of people getting in at 590, 10 cents before the resistance area, and the thing pops up to 605, 610, those same people are getting their 15, 20 cents that they were planning on getting to begin with, and they're selling. And so you see the stock drop down, hit down to 590, 585. They got their profit. Now the stock starts to gain momentum again. It goes through, it re-breaks $6, and now it takes on up. So primarily, the primary break of 6 seems to, the primary break at the resistance level seems to not be carrying on up, because before this all happened, we had all this influx of new traders. You would see a resistance break, and the stock would basically continue just to cascade on up, and it would go up, and you would get a clean break, and it would go up, and it would hit our PTs, or maybe go up and only drop back, a few cents. Maybe it would go up to 613 and come back to 608, and then move on up in 615 and kind of fluttered in there. But we didn't have these big drops, like people just jumping in, market selling at 605, 610, and dumping all their shares, at their down to 590 or wherever that they bought in at. So how do I handle that? Well, what I've started, there's a couple different things you can do. I've actually started. If I buy into a stock, let's say I jump in at $6, and it takes off and it goes up and it pulls back and it comes back down to 590, 585, I'm getting out. And I'll jump out and I'll wait and I'll watch the stock and I'll watch what it's doing and I'll see. Okay, let's say I got out at 590 and this thing continued on down and it got down to 585, 582, and it started to come back past 590. If it continues on up with momentum headed towards $6, I might buy back in right there at 590, you know, as it comes back past 590 on its way to 6. Now, by the time it gets to 6 to the alert level, I've recaptured that loss that I inflicted on myself by cutting an early loss. I've recaptured that, and I basically start the alert over at 0 or close to it, or sometimes even green if I catch it down below on a dip buy. Because sometimes, you know, you figure, like Dave was saying, previous resistance is now support. So if it was, that would be 575. So you might get a stock that you jump out at 590 and it comes all the way back down 578, 577, and then it starts back up, you know, from there. So, I mean, you could jump in as it breaks past 580, and by the time you get back up to where you jumped out, you've already grabbed that 10 cents, 11 cents back that you had lost. So now you're at 590 and you watch it. The thing, if it's going to continue on, okay, great. You know, you just stay in it. If it starts to pull back, you just get out. Now you've recaptured your loss. And then you can, once it goes back up and it breaks past the resistance area, then you can go ahead and you're just playing the alert secondarily, which is my point in this is what I've noticed is that alerts are becoming successful secondarily, not primarily. So that we're getting a lot more alerts on these breakouts that are going up, breaking just a small amount. We see a bunch of selling going on, people jumping out, taking profit real quick, just scalping really quick, and the stock drops down, and then it goes ahead, breaks past the resistance again, and then continues on up, and we hit our PT. So that's why we're seeing these pullbacks. In my mind, what I'm thinking is because of that. We didn't used to get that so much, but we're getting it a lot more these days, where the breakout alerts are secondarily successful. You know, the alerts wind up being successful, yes, but they're not primarily successful like they used to be before this influx of new traders has come in.
Yeah, I agree. That's something we've been seeing, and then a lot of the support buying and dip buying stuff has been a lot better. So, you know, me and Rocket Rod talked. We're gonna, put a little bit more strategy in the chat room. So you'll probably see that over the next few days with some charts as well. Sort of like what I did with Sava as well, with me and David in the afternoon. I think that was a great play that me and him, kind of walked you both through. The room through, but we'll start posting some more charts and kind of drawing out like what I'm looking for it to do. And the stock did exactly what I thought it would do on the money. So, I hope that helped.
I'm gonna ask something. Do you guys trade more in the morning or in the afternoon? Thumbs up, you trade more in the morning. Thumbs down if you trade in the afternoon. Thumbs up. In the morning or okay, both. Okay. Okay, so morning time. Okay, cool.
You only can see a couple, David. So
I do a lot more watching.
That's why.
I do a lot more watching in the afternoons than I do trading. I find.
Mm-hmm. Steve, you're kind of done by afternoon, aren't you?
I'm generally done. Yeah, I mean, today I had a dental appointment at noon, so I had to bail out, but I mean, coincidentally, I had a losing trade. Yes, I have losing trades. I had a losing trade on that 1080 break on Huge, which brings to mind what was just talking about. That I feel like after I played that, I looked back at my trade and I reviewed my trade, and I thought, you know what, you shouldn't have played that breakout, Steve. What you should have done was grab that thing off the 50 down low and played a support trade and just traded the channel all the way up. Because at that point in the channel, that 1080 break is where it broke out of the channel. That would have been where I would have sold, which is what a lot of traders did. And that's the reason that alert went up And then the thing immediately came down from there, because once it broke out of the channel, up there above 280, it never made it through resistance at $11. And everybody was selling right there at that point, because they had been playing it, from the 50 and just playing in the uptrend channel all the way up, and scaling in and out on the way up at the highs and lows within the channel, like you were pointing out, Dave, with the RSI, and staying within the channel. And so when I went back and looked at it, I said, okay, well, it was a $900 hit for me, which I made it back later in the afternoon power hour after going to the dentist. But, it was just kind of one of those things. I went back and I said, okay, that was dumb. You know better. You saw it. You saw the trade where you should have got in, but you weren't paying attention. Well, let me tell you how I wound up with that. I'm going to blame this one on David, because I jumped in the trade, and Dave said, I'm going to go get myself something to drink. And I thought, hey, he's not worried about it. Neither am I. So I ran to get something to drink. I came back and I'm 900 down. I'm like, oh, damn it. So I didn't even, it was my own dumb luck. I should have got out. I shouldn't. That right there, it just shows that you cannot leave your computer even for an instant. I mean, it couldn't have taken me more than 10 seconds to run and grab a Powerade and get back to the desk. And when I came back, I looked and I'm like, oh, good Lord, I'm already down. So, what I got lazy. If you're going to get up from your desk, put a stop loss in there, but I got lazy. I thought, okay, it's fine. Dave doesn't seem concerned about it. Well, he didn't seem concerned because he had a stop loss in. Right. And I just jumped up and took off. So I was just like, I was it kind of just brought to light the whole thing about the alerts and how people are playing them. I mean, the breakouts, not necessarily alerts, any breakout, because there's a lot of breakouts happen that we don't get alerts for. We see breakouts all the time. And if you notice, if you start playing a lot of these, even if you don't play them, trade them, if you just trade them mentally and say, okay, I'm in here, and then just watch it, and you're going to find a heck of a lot of these breakouts are doing exactly what we're talking about here. They go up just slightly above 5, 7 cents, 10 cents above the breakout, and then they pull back to 10, 15 cents under, and then secondarily they come back up, break resistance, and go on to make maybe a new high of the day. So I think it's just something that we need to be cognizant of, recently, because of all the new traders, and it's kind of taken on. I think these newer traders have been at this enough, right? They've been at it enough now, right? Because you got a lot of people that have been out of work, that have been home, trying to trade, trying to learn how, and they're kind of developing into this to where I call them the front loaders, and they got their own mindset about it, and they're front loading the resistance. They're front loading into it, thinking, when this thing breaks out, I'm going to jump right out. And, because they know that generally that you get a slight pop, 5, 10 cents pop after a breakout. So they sit there with their hand on the button. They load in at 590. They sit there with their hand on the mouse on the sell button on a market sell. And as soon as they see that thing pop, it goes above, then they'll sit there and they'll click the market sell button. As soon as they see the thing pop up, and they'll get it at 605, 610, and then it just sucks back. So I think it's just something that we should look at in the, here recently. I don't think it's going to remain that way. I think as things begin to normalize again, such as it is, I think you're going to see the trading gets back. One of the things that Alan pointed out was you have more people starting to get, with the reopening, such as it is, you got more people heading back to work. So you're losing some of that crowd of the people that were trading all the time. So you're losing some of that crowd. And I think you're going to get back to, more of the traders that hang on and or get back to a more experienced crowd.
The setups, they're going to be playing the setup. So
that's right. That's right. So we were, go ahead, Alan.
Subject here. I got a lot of people asking me for like Stream Deck lessons and stuff. What do you feel of, would you guys be, I mean, maybe if we do a Stream Deck lesson, like a quick little short 30-minute one, like maybe this weekend sometime or something, I don't know, just get on and we'll record it. That way we can give it for people that didn't get on it, just some quick little setups on it, because I feel like a lot of people are getting them. So
yeah, I mean, Stream Deck it's very simple actually to set up, but if you haven't done it, it can be a little intimidating, especially since you don't know, what should I be setting up? What is actually the values that I should be entering in my Stream Deck, right? And
for the different brokers and stuff. So yeah, I think we'll just get together, Rocket Rod, and we'll figure out, and then we'll post it in the group, and then we can do it all with somebody. And whoever wants to join it can join, and if not, we'll have the video and they can watch it later when their show's up. So
That's
well,
right.
hey, listen, I don't want to take up people's dinner times, or maybe you guys are done or whatnot, but I just want to make sure everybody's good for tomorrow. Was this a good session or what, guys? Was it pretty good? Okay.
It was great.
All right. Thank you so much for,
Very informative.
Yeah. Thank you guys so much. We want to make sure that you guys really, really get this done, because, I listen, I don't feel good when you guys, don't get it and you guys are like struggling. I really don't. I really have a passion in this. I really want you guys to succeed. I mean, it's just seeing Steve, he came in here blowing 30K in the first day, or what was the second day? It's just like, first month, whatnot. Now he's just, look at him. He's just running his mouth now. So, I'm just really, I want to see more of these people like that. I want to see more of you guys being that. I think you guys should be excited about this. This is something that, that it works. And if you guys just put in the study and time and ask good questions, I think every day we're going to be just seeing some great results. So,
yeah, let's level up the chat room some more, more talking and communicating. I had a couple people, say, well, maybe I don't feel comfortable talking yet. Maybe I don't know what I'm doing. No, guys, if you guys we're in a tight niche. Like, I think there's 30 something of us. You guys should all feel free to talk, and nobody's going to make fun of anybody. There's new people, there's advanced people, and we, just get some activity in there. Let's continue to post charts, draw our lines, and work together. I think it's doing great. And especially once a team really starts going in, we find a play and we're all getting in on it. I mean, we kill it.
Well, how many times has everybody here been sitting there with a question in their mind, and they're afraid to ask it. They're afraid to type it out or something like that, or join in on the voice here. And then somebody else will ask it and they're like, yeah, I have that same question. So don't be shy to type anything, any questions you have whatsoever, no matter how mundane they may seem, or elementary, or it seems out in left field or something, because more than likely somebody else in the chat room has the exact same question or the exact same problem, and you're going to be solving their problem as well as your own. So that's one of the things that I picked up through the processes here is never be shy about typing something out or joining in on the voice. Unmute your microphone and just jump in there and ask a question and join in the conversation, because that's the only way that you're really going to learn, answer your questions, and move forward in this is to be a participant. You cannot just be an observer. You have to be a participant in this learning process, in the questions. It has to be an engaging conversation. It cannot just be something where you sit back and listen and hope that, what you're struggling with gets mentioned. So you have to bring it out, get it out in the open. Let's discuss it. Let's find out what's going on and get the problem solved. And that's the way, you move. That's how you move along as a group. Yeah. We're not, everybody's trying to move along individually, but we can do that by moving along as a group.
Well said, Steve. Thanks so much, man.
And right now, I mean, for you shorters, I haven't been giving out too much short stuff. It's just kind of been risky these days. So let's take a chill on that for a little bit. As soon as I start seeing some, I will as well. And the blue chip stuff, besides today, today there was definitely some opportunity. It's been a little bit wacky for me as well. So we'll hop back up on that horse and we'll get it for you guys, because I know there's some that likes higher price stuff. So, and yeah, so sweet. Well, David, anything else to say? Anything else?
I they're ready to go, man. They need to go get some rest, get some food in, whatever you guys need to do. Get some rest.
The trade review stuff. Yeah, we have to. We've been working on that. I've been working on it and playing with it as well. We need to get doing some.